Financial crisis. Indonesia and the Currency Board proposal. Before Suharto era, government conditions are had expropriated all foreign assets, had established state control over most markets, control foreign trade, control bank credit, economy characterized by regulation and state control. It affected to export stagnant, factories were operating at a fraction of capacity and inflation was rampant, huge budget deficit, foreign debt over $2 billion, interest on the debt was more than Indonesia's total export revenues. On Suharto era 1960s to 1980s, the economic reform it encouragement of foreign direct investment, natural resource exploitation, and reform bank sector, which is primarily state and private banks. In early 1970s, foreign exchange control were abolished, reform multiple exchange rate. When 1971, rupiah fixed rates at $1 equal to 415 rupiah, and bank fee to offer foreign currency deposit account. October 1997, rupiah drops to 60% from pre-flotation value 2,400 rupiah per US dollar, and banking system collapse. Indonesia companies defaulting on their loans and then asked for IMF fund and got biggest loan package. But after economic reform, there are some conditions in Indonesia. The first one is merging state bank, improving institutional, legal and regulatory framework for financial system. Second one, efficiency and transparency, liberalization of foreign trade and investment, expanding privatization program. Third one, tight money policy, flexible exchange rates policy. And the last one is fiscal tightening. It's 1% of GDP. After the economic reform 1998, Indonesia and IMF relation start to tension fail to end subsidies, monopolies to run a surplus, is sending rupiah to 10,000 rupiah per US dollar. And then President Suharto signs LOE with IMF. And after that, rupiah recovering shortly to 8,100 rupiah per $1. President Suharto announced that he would stand for 7th 5-year term as a president in 18 January 1998 and chose Mr. B.J. Habibie as his vice president candidate. Its cause, rupiah had fallen to 16,500 rupiah per $1. The effect of IMF LOI, it increasing price in Indonesia, such as food, cooking oil, and kerosene, and this led riots in Java cities. At the end of January 1998, Chinese businessman Capital Flight accelerate. President Suharto signed LOI with IMF. And once again, rupiah recovering shortly to 8,100 rupiah per $. The Currency Board, Professor Steve Hanke at Johns Hopkins, USA, said, rupiah should be set at a fixed exchange rate to an anchor currency as fast as you possibly can. If rupiah holders still switch to US dollar, rupiah supply would contract and rupiah interest rate would rise. If US dollar holder were tempted by high rupiah interest rate, buy rupiah so rupiah supply and interest rate set by market force. A currency board. It assists firms and banks to repay foreign debts, help the country in importing critical foods and materials, private sector's money. There are few of problems of the currency board. The first one is could be covered by the level for foreign reserve. Second one could withstand further speculative attacks. And the last one should get trustee to help families' business get out of the country at a favorable exchange rate. And if this is not handled so carefully, it will bring to greater difficulty. The international community said currency board would not only fail, but also would lead to further economic hardship. The IMF said that LOI more sufficient to restore economic stability and should diversely than currency board, and would withdraw 43 billion US dollar in package. President Clinton called President Suharto to drop the currency board. There is 4 international critics to IMF. The first one is from Professor Jeffrey Sachs, director of the Harvard Institute for International Development. Professor Jeffrey said that IMF had imposed macroeconomic contraction on top of market panic, even worsening the situation by creating much more panic than calm. IMF provided the substantive documentation of its decision except for a few pages in the press release. And the second one is from Professor Raffler of the University of Vienna. IMF was not only totally exempt from any financial accountability for what it does, but even allowed to gain from its own mistake or sloppy work. The third one, former US Secretary of State Dr. Henry Kissinger said, IMF's program as having crippling effect on economic it intended to cure. And the last one is Martin Feldstein, Harvard professor and former chairman of the US President's Council of Economic Advisors. IMF should eschew the temptation to use currency crisis as an opportunity to force structural and institutional reforms on countries. It should strongly resist the pressure from US, Japan, and other major countries to make their trade and investment agenda part of the IMF fund condition.
Basic theory, financial crisis characteristics. We can see massive shocks to bank liquidity, payment system and solvency, dramatic loss of depositors and investors' confidence. Several types of financial crisis. Currency crisis occur when an attack of the exchange rate of an economy's currency results in a devaluation or sharp depreciation of the currency. Banking crisis occur when bank runs or failure force banks to renege on their liabilities or force governments to intervene to keep the banking system from failing. Foreign debt crisis occur when a nation or region cannot service its foreign debt, typically due to a shortage of foreign exchange. Systemic financial crisis occur when the financial sector gets so disrupted that it can no longer properly support the workings of the real economy. Financial crises often see exchange rates and asset values tumble, financial institutions fail, ripple effects hurt other types of companies, and substantial economic dislocations. The various crises tend to be caused by unsustainable economic imbalances due to misaligned asset prices or exchange rates, global financial fluctuations, structural economic problems, poor financial market supervision, inappropriate behavior within the financial sector, and unsustainable macroeconomic policies are often contributing features. Government policies, lending booms, over-investment in real assets, and a resulting overvaluation of assets. Warning signs of financial crisis. A. Value destruction in the private sector. B. Interest coverage ratio. C. Profitability of banks. D. Rapid growth in lending portfolio. E. Shrinking deposits or rapidly rising deposit rates. F. Non-performing loans. G. Interbank and money market borrowing rates. H. Term structure of foreign bank loans. I. Rapid growth or collapse of international money and capital flows. G. Asset price bubbles. This is typically for Indonesian. As we know, Indonesia has plenty of natural resource, fishery, forestry, plantation, and high populations. For these factors, it almost cannot imagine that Indonesia can the worst impact of the ASEAN financial crisis between Malaysia, Philippines, Thailand, and Singapore. There are several factors that make Indonesia hit the worst impact of the ASEAN crisis, because Indonesia has inefficient economy, depend on crony and conglomerations, with only one minority ethnic that has almost 80% of economy resource, and the unbalanced rate between export and import, low productivity, and Indonesia also has weakness, technology, manufacturing, and skill. Recommendations: execute currency board, but with very tight this condition. 1. Detailed and carefully calculations. 2. Wealth distribution means no more for conglomerations. 3. Strongly market supervision. 4. Keep strictly balanced sheet. 5. Strongly law enforcement. Because we optimistic currency board will be success, because Indonesian crisis not just financial crisis, but politics agenda bigger than financial crisis.